right, Dr. Kohli, please stay on with me. I'll come back to you. Now, Indian equity markets have traded firm today after a flat opening supported by positive global cues and falling crude oil prices. While analysts continue to see a consolidation phase with range-bound technical indicators and investors favoring selective stock-specific opportunities. In early trading, the Sensex was up 452.03 points or 0.60% at 75,635.39, while the Nifty gained 117.20 points or 0.50% to 23,771.90. And Dr. Kohli, if you could simplify that for our viewers.
Yes, Vaishali, I think the markets have been playing to the tunes of crude oil in America. And of course, FII selling, it just keeps coming back. For the last 3 days, they have sold uninterruptedly. They've just not taken any break as far as this week is concerned. The first 2-3 days, there was a nominal buying. But then for last 3 days, it's again being back to selling. So, and of course, the rupee dollar, that's been playing a very, very substantial role in the markets because every time rupee gets weaker, there is pressure on the corporates as far as their bottom lines and top lines are concerned because it makes the input cost higher, which makes the profits come under pressure. And, obviously that the market operators, they feel that the results are not going to be that great as far as the corporates are concerned. So crude oil is a very, very dominating factor. Every time you find crude oil coming down, which is right now trading between 104 to 105, well, last couple of days it had gone up beyond 110. It's now back to 105. That has brought some reprieve. And also we should not forget, Vaishali, that Reserve Bank of India is meeting today, and some measures of which I was observing that RBI wasn't intervening too much in balancing the rupee dollar because it does these rupee dollar swaps. And I think it was trying to save that precious foreign exchange. But now I think with the rupee getting weaker and weaker, it's heading closer to 97. And some people, including me, feel that if a free fall continues, 100 may not be too far. So I think RBI may be stepping in now. RBI may be doing some rupee dollar swaps for taking out some dollars and spending for this purpose because there is a need to stabilize rupee. Otherwise, inflation in the economy is going to creep in. We already saw 8.3% wholesale price index, which will convert to retail price index in the months to come. And we saw the prime ministerial meeting yesterday with the cabinet, the marathon meeting. I think this was one of the points of discussion that inflation has to be controlled. So if rupee gets under control, you will see markets relaxing a bit because the markets have been under pressure. They've been below 24,000 as far as Nifty is concerned for last several days now. So I think the markets will begin to recover. Of course, the larger factor is Strait of Hormuz. The yes and no between US and Iran, that game continues. That will be the larger factor. But in the interim, these factors of rupee, crude oil prices, RBI intervention, these factors will continue to play the role, Vaishali.
Thank you, Dr.